So D-Wave is a really interesting one. Okay, D-Wave gets about 85% of their revenue from one customer. Now, I think this is actually not great. It's been great for the company because they've really been able to explode their revenues. But when you have 85% of your business coming from one customer, mostly research customers, the broad-based business application for D-Wave, I don't think is very valuable. Now, in fairness, I did say this morning in the Alpha report, I said, hey, calls on D-Wave. This thing's probably going to keep momentum rocketing, and it did. You know, it's up a third from when we mentioned it. So how do I reconcile that? How do we reconcile that in the short term we could be bullish, but longer term we're not? Well, first of all, D-Wave's momentum's been kicking butt since November. The stock is like 15x'd. So you can't fight this momentum. The momentum is so crystal clear, and you don't want to stand in the way of momentum because you're going to end up getting hosed. The problem with the company is people look at it as a quantum compute investment because it's literally called D-Wave Quantum Inc. And they talk about quantum compute as a service, so QCAAS, which, you know, everybody relates that to SaaS businesses, software as service, and the money that's made over there, and people get really excited about it. The problem is quantum computing technology that D-Wave uses is an annealed process of quantum computing. It's actually not true gate-style quantum computing, which would be your most advanced, like we could break cryptography quantum computing, or the quantum computing that like Google is doing in their research labs or Microsoft is doing, where they're like so excited they're able to get their technology to operate for a fraction of a nanosecond. That's sort of like full-fledged quantum computing. D-Wave is more like, hey, we have one way to solve really specific research applications, and we're really good at doing this one niche thing. So it's not general purpose quantum computing. As long as you know that, then I think it's more fair to look at Quanta or a company like D-Wave. Now their revenue exploded to $15 million from $2.4 million in 2024, which actually gave them a nice gross profit. But again, we don't know the specifics about this customer A that was responsible for 85% of their revenue. In fact, if you take for a moment, I mean, let's just do the math here and just see. If you take $15 million and multiply it by 0.15, so the other customers, with the exception of customer A, you would have actually had negative revenue compared to 2024. In 2024, you had 2.4 million, you'd be down at 2.25 million. So in other words, revenue would have shrunk compared to 2024 had it not been for that one customer. And that's somewhat of a dangerous exposure, especially since a lot of the institutions seem to be research institutions. See, when you go into their news and sort of their filings over here, you can kind of look at some of the companies that use them. I lead the significant R&D effort at LANL, which is the Los Alamos National Laboratory. And a lot of these security-focused research or breakthroughs in life sciences, whatever, a lot of these are research-based applications. There is a real risk to what happens broadly to research funding and the ability for universities or research institutions to keep buying new technologies in the face of DOGE or limited government funding or whatever. You know, Harvard, for example, spends, $1.4 billion on research, and they get somewhere around $500 million in grants. We did a whole video breakdown on this, how they spend more money than they get from the government on research. And a lot of that's been cut. But Harvard's gotten hit really hard. Now, obviously, they're just one example. I'm not saying that all research institutions around the world are going to suffer this. Certainly not. But it's important to know these new products, like what they announced today, the Advantage 2 system, which develops on the previous Advantage 1 system. These are built for research purposes, and they make no shame in this. D-Wave continues to expand its fleet of annealing quantum computers hosted around the world. And this is fine. The sole point of me bringing it up is you have a very limited set of customers, and if one customer goes away, there's going to be a big hit to the earnings of this company. They make no secret that this is annealed quantum computing. Most people don't know what that is. So there's also that risk factor, that there is momentum in the stock based on people misunderstanding what the corporation actually does. Those things combined make it, in my opinion, an undesirable long-term play. However, in the short term with losses of $5 million in the quarter and a huge balance sheet, I'm not really worried about it. See, the company actually just raised $146 million, I want to say it was, through the issuance of stock. If you go to the cash flow statement, you can see it right here. Yeah, in Q1, they issued $146 million in at-the-market offerings. Okay, well, how are they able to do that? Well, they're able to do that because the stock is going up, so they just issue stock. They issued $146 million worth of stock. Their cash and cash equivalents are now sitting at $304 million. And previously, they were sitting at $177 million. So they basically doubled their cash position. And they've got total liabilities, including deferred revenues, I mean, everything total together of $118 million. Their balance sheet is actually really good. So they could totally afford to lose money for quite a while longer. And that, I think, could give them continued sort of momentum enthusiasm because they're not going to go bankrupt. They're doing the right thing. They're diluting the stock while they're public at these high prices to make sure the foundations of the business have as much cash as possible. It's honestly pretty dang impressive. And they're picking up on the momentum wave, and they're kind of doing exactly what you should. So good for them. Now, in fairness, we've seen this happen before. I won't mention specific names, but we've covered them. Like there was a 3D printing company we covered in the past. And I've done interviews with people related to that 3D business and otherwise on the channel. And I would say every time that Israeli company, every time their stock goes up, they just issue shares. And it's so smart. But eventually, the core business has to show that is commercially viable. Otherwise, it does eventually bleed out over the long term. So I think that's a red flag for the long term. In the short term, I mean, it's like a trader's paradise in the short term. Obviously, be careful. I don't think that even the 30% that it's up today is going to last. That's why I always advocate when you're trading, set trailing stops. So example, on the alpha report this morning, let's say it's up, whatever it was, 15%. I'm like, I think there's a chance this could go up, substantially today, and then it goes up another 15% or 12% or whatever it was. That's an opportunity to trade, but eventually that momentum fades. Sometimes it's the same day before the close. Sometimes it's a few weeks later. It's just something to pay attention to. And it certainly depends on your trading strategy as well. And if you want to be part of sort of those opinions on trades, try out the Alpha Report. Go to meetkevin.com, give the Alpha Report a shot, see what you think about the Alpha Report. And if you don't like it after 30 days, you can cancel your subscription. No harm, no foul. Hey, quick reminder, if you want to earn a 5% yield plus all of the upside in my real estate startup, we are offering a non-accredited investor round where we will pay you a 5% yield plus you get all of the upside in the stock when your stock converts in the future. It gives you an opportunity to diversify away from rich stock market valuations, diversify away from most tariff risk, diversify away from the craziness of the treasuries market, especially with these Moody's downgrades. You diversify into fixer-upper real estate, which is what I believe I do best. This is my baby. I call it my little Berkshire Hathaway. Now, maybe I'm biased, but I've got over $5 million of my own money invested into this business, and I'm so excited for what I think we're going to be able to do with this business over not just the next years, but the next decades. So if you want to invest in my real estate startup, go to househack.com and know that I will do everything for this business in my power to make sure we can do the absolute best that we can. Make sure to read the solicitations and disclosures on the Househack website because there is risk with every investment.